Okay, good morning, good afternoon, everyone. We will just take a few more seconds, let a few more people enter, and then we will get started. We're so glad that you're here. Okay. All right, we're going to go ahead and get started. And all right, I'm going to begin by just hitting my record button so we can get started. All right. Oh, it's already recording. Great. Okay. So good afternoon. I'm Cindy Nellis. I'm the director of the Clarion University Small Business Development Center, and we welcome you. We are glad you are here. Today's webinar is tax compliance for restaurants, and we are partnering with the Department of Revenue and bringing all of these webinars with you. So we have a panel of great experts with us today. Just a few announcements before we get started. The Pennsylvania Small Business Development Center, we have been running monthly webinars with the Department of Revenue. And so after today's session, I will be emailing out this flyer to hopefully give you a chance to register for some of our upcoming webinars. So 4 great topics and just great sessions to sit on, usually about an hour each month. So I hope you can join us. If you have questions today, and we are going to have time to take your questions, I just ask that you use the Q&A to post your questions. And if you have a question for me, I would ask that you use the chat feature for that. Let me introduce you to the Small Business Development Center, Pennsylvania SBDC. We are an agency that is here to help businesses start, grow, and succeed. We're a grant-funded program, and in Pennsylvania, we are a network of 16 centers, all located at institutions of higher education. We're part of a national network called America's SBDC. So no matter where you are across the country, there is an SBDC in your neighborhood. My particular SBDC covers 10 counties in Northwest, North Central Pennsylvania. But like I said, there are 16 centers in Pennsylvania. So what does the SBDC do? Well, we offer consulting services. That's our primary responsibility of taking our services on the road and meeting you where you are. Our consulting services are one-on-one, and they're confidential, and they're at no cost. So if you are a business owner that has questions, the SBDC is a great first place to start. Just like today, we offer training seminars and webinars, and I post our PASBDC.org website, because you will see on that website all of the training events that are being hosted by all of our SBDCs across Pennsylvania. In addition, the SBDC gives you access to tools, resources, and expertise throughout our centers and throughout our network to help provide answers to the challenges that you have with your business. And our information is on the bottom of that slide. This just gives you a map of our SBDC. So if you find your county, you'll see what SBDC covers your territory. And then after today, if you're not already a client of the SBDC, we encourage you to become an SBDC client, where you can get access to all of the things that I just talked about. And why don't we go ahead and get started? I am going to turn this over to Alicia Gauntz. Alicia is with the Customer Experience Center with the Pennsylvania Department of Revenue. So Alicia, I will turn it over to you.
All right, thank you, Cindy. Let me go ahead and share my screen real quick. Can you see my PowerPoint here?
Let's see here a second.
Looks good to me, Alicia.
Okay.
Awesome.
I'm
Thank you,
having a
Ben.
little bit of problem here. Thanks.
All right. So good afternoon, everyone, and thank you for joining us today. As Cindy mentioned, my name is Alicia Gotz. I am the chief of our Customer Outreach Relations and Engagement Division within the Customer Experience Center here at the Department of Revenue. I know that sounds like a lot, but essentially my area is responsible for the outreach and education efforts provided by the department. A little bit of background on me. I've worked for the Department of Revenue for over 11 years now. I started my career in the Collections and Taxpayer Services call center, and then I moved to the Taxpayer Service and Information Center, so the customer service side of things. And then later, the two areas were merged into what we now call the Customer Experience Center. So my focus was then transferred to more of the outreach and education. I am joined today by Ben Turek from the Bureau of Audits. Ben, did you want to take a few minutes to introduce yourself?
Sure, I can do that. Good afternoon, everybody. I'm Ben Turek. Like Alicia said, I am with the Bureau of Audits. My current role is the program administrator for our sales and use tax and personal income tax programs. I've been with the department 15 years and have been in this role going on about 2 years now.
Great, thank you, Ben. So Ben and I are here to talk to you all about the new initiative that's happening in the Department of Revenue. We're calling this the 2022 Restaurant Industry Initiative, which is focused on improving compliance in the restaurant industry. For those of you who are not aware, the department has been investing more resources in the restaurant industry in the past few years. So we're going to take a few minutes to talk about why that is. The Department of Revenue has identified a number of unique compliance issues in the restaurant industry through audits and research that led to focusing and addressing these issues. In 2014, the Department of Revenue piloted a program which focused on electronic sales suppression, or ESS. So electronic sales suppression is the use of software, often referred to as zappers, to systematically delete transactions from point of sale systems. So people were intentionally going in and deleting sales, and as a result, they weren't paying taxes on those sales. The issue was believed to be widespread in the restaurant industry, and it could be easily identified by gathering receipts prior to doing an audit and then looking for transactions that were re-indexed or missing. So this pilot program targeted just a small group of businesses, but it did identify that electronic sales suppression was in fact being used by several businesses in the restaurant industry. Based on the results of the pilot program, the program was expanded statewide in 2016 and 2017, and it even contributed to legislation which made the use of zappers illegal. In 2018, the Department of Revenue was awarded the Governor's Award for Excellence due to its work on this project. And since then, we've been trying to understand more about other compliance issues in the industry and address the issues that have been identified. However, in 2020, we were all hit by the COVID-19 pandemic. And with that, this industry was heavily impacted as well. Many restaurants had to shut down. When they were able to reopen, they could only do so in a limited capacity. There were also shifts in consumer habits, and the industry has been struggling with labor shortages. In the spring of 2020, the department had announced several steps that it was taking to ease the burden on all businesses. This had included the halting any new audits in fieldwork until July of 2020. Now that audits have been reinitiated, the department has developed a strategy to start to address the compliance issues while still being sensitive to what these restaurants have been through. So this new approach has two components. The first piece focuses on education and outreach. So the department has designed additional resources and guidance for this industry to help them understand tax laws, policies, and procedures tailored to the restaurant industry. We hope that these businesses will take advantage of the resources and ensure that the restaurant is in compliance. The next thing we did was mail letters to active businesses that are registered with the Department of Revenue under a NAICS code starting with 722. So these letters started going out around February 23rd, and they were mailed every week for about a 5-week period. In total, we sent out about 28,000 letters. The next step will be to have field agents visit select businesses in person to discuss their obligations and make them aware of the available resources. So let's talk a little bit more about each of these pieces here. So first was the letter. This slide here shows an example of the letter that we sent out. It simply lets the customers know that the department is taking a twofold approach to help businesses work through the hardships caused by the COVID-19 pandemic. Within the body of the letter, we spelled out the website to find additional resources. And then we let them know that if they were selected for an audit, we would conduct a limited scope audit of their current month rather than the traditional 3-year look back, so long as they meet requirements for the limited scope. And we're going to talk about that in a few minutes. In addition, we listed a phone number on the letter itself that businesses could contact if they had any questions about the program. To help the businesses ensure that their books and records are in order prior to any audits being initiated, we also included an insert along with the letter that outlines what is taxable, what is exempt, how to handle coupons, and what type of records they need to be keeping, along with the details of what those records should contain. So this here is all key information that will be reviewed should the business be selected for an audit. The next thing that we did was stand up a web page designed specifically for restaurants. So we gave that web page a URL, which would be simple to remember. We went with revenue.pa.gov/restaurants. And then we used this as a place to store all items related to restaurants or to this initiative. If you take a glimpse at the website, you'll see that we spelled out what's considered a restaurant or an eating establishment, general sales tax information, general information on employer withholding, information on income taxes, record keeping requirements, frequently asked questions, and then links to several resources on the right-hand side of the page. So those resources include the REV 717, filing and payment information, the due date guide, and then a Revenue 411 video on record keeping, along with a lot of other things. So speaking of frequently asked questions, we as a department tried to outline what questions this industry might have related to taxes and their daily businesses. We created an industry-specific category in the online customer service center so that you can access these FAQs from either the restaurant webpage or by going directly to the online customer service center. Another great feature of the online customer service center is that you can submit a question to the department if you can't find the answer that you're looking for. So to do so, you would click the tab at the top of the screen that says submit a question. So you can see on our slide here, we have find answers highlighted in that navy blue, but right beside it is the tab that says submit a question. One of the most exciting things that we've done is create a Revenue 411 video designed to cover record keeping in the restaurant industry. We're going to play this after I run through the PowerPoint here today. I will warn you, the video is about 30 minutes. So whereas it's longer than we'd like, there is a lot of really good information in there. We have created tags in the video. So if you only want to hear about daily records, you can go right to that. If you want to hear about monthly records, you can go right to that, and so on. So it is hosted on YouTube, but there's a link to it on our webpage. So this module does break down what type of records need to be kept, how they support the figures on the business tax returns, and then common errors to avoid. Again, the link's available on the website. You can watch it on demand as many times as you would like. All right. Also, as we mentioned, we've established a dedicated phone line. So this line was created with an extension to specifically handle calls related to this initiative. You can see on the slide, the number is 717-425-2495 with an extension of 72251. In case you're wondering, that extension was created based on the NAICS code for the industry. And then finally, we created a handout specifically for our field agents that will include QR codes, which link back to key resources available for this industry. So we're hoping that this is something restaurant owners can hang in their office in case they ever need to get to these resources quickly. And you can see here that there's QR codes to the web page, the PA code, which talks about the record keeping requirements, the REV 717 to find out more about what's taxable and what's not. There's the due date reference guide, and then frequently asked questions once again. All right, so now let's talk about the second part. So the second part of the initiative is to take a new approach to the way that we audit these businesses. First, the Department of Revenue will make purchases from restaurants prior to initiating any audits. So similar to what they did during the electronic sales suppression pilot program. Once the audit is initiated, the auditor will review 1 month of the business's books and records. If everything appears to be in compliance with the Pennsylvania tax laws and procedures, the restaurant will not be subject to a standard audit. So the auditor will accept that 1 month or limited scope to be sufficient evidence that the business is in compliance. In order to be deemed compliant and qualify for the 1 month examination, a business must have no delinquent tax returns, address all outstanding liabilities, maintain complete accounting records that allow for proper examination. So the records that are typically required are described in the audit handout that we created, and they're also described in the record keeping video. The business must report all sales, use, and employer withholding documented in their accounting records. And the examination of the sales or payroll records must not show any signs of missing transactions or employees. If for any reason the restaurant appears to be non-compliant, the auditor will then do a standard audit of the current year plus the 3 previous calendar years. So the idea behind this approach is to ease the burden on compliant businesses and allow us to review more taxpayers who may not be doing everything correctly. So to provide more details on what that audit process looks like, the department has created a subpage off of that revenue.pa.gov/restaurants, which outlines all of these details. So there is a resource titled Audit Handout, which includes all of the what the initial audit will look like, along with the differences between the limited scope and the standard audit. Again, the biggest thing to take away is that the limited scope audit is just a review of a 1 month period, and taxpayers must be in compliance to qualify, whereas the standard audit is the current year and the 3 previous calendar years. Again, if the department reviews 1 month period and there is any indication of missing or re-indexed records, that will disqualify them for that limited scope. Also, all returns have to be filed and all tax due needs to be addressed. So whether that's paid in full, set up on a payment plan, or under appeal, we have to know that you are trying to take care of that tax liability. So the goals of this initiative are to achieve the greatest level of tax compliance with available resources and level the playing field for all taxpayers. We want to expand our impact beyond the direct results of audits, and we want to be responsive to the unique circumstances for the industry, which focuses on providing outreach and resources so that the industry has what they need to be or to improve their own compliance. And then this slide here just shows you the timeline of events for this initiative. So We told you that the letters already went out in February and March. Field visits should start very soon here in April. And then audits will not begin until May, allowing businesses plenty of time to ensure their books and records are in order. And then from there, we plan to measure, adjust, and learn from our findings on how to further help this industry. So before we jump into any questions, I'm just going to pull up this website, show you guys how easy it is to navigate, and then play you that Revenue 411 video. And then we will have more than enough time to answer any questions that you might have. All right, so I already have it up, but for the sake of showing you guys here, we'll go revenue.pa.gov/restaurants, if I can spell it right. That will bring up the restaurant industry webpage. You can see here, this is the foundation that we were talking about. What is the eating establishment? Here's your sales tax and your general topics, record keeping. And then on the right-hand side here is all those links to everything that you might possibly need. To access the Revenue 411 video, you can either find it here in the gray sidebar, or you can scroll down to where we talk about record keeping on the page itself, and then click this link that is embedded.
So previously, when we were using spreadsheets, we were heavily meeting dependent. It took us hours to update our tasks and our projects. It was
Welcome to Record Keeping for the Restaurant Industry. This module is intended to educate eating establishments within the restaurant industry on why they need to maintain good records and what specific requirements they have to demonstrate that they are in compliance with Pennsylvania tax laws and regulations. An eating establishment is defined as a business or an identifiable location within a business which advertises or holds itself out to the public as being engaged in the sale of prepared or ready-to-eat food or beverages to customers for their immediate consumption on or off the premises. An eating establishment may be mobile or immobile and may or may not provide seating accommodations for its customers. All right, so why keep good records? Good record keeping allows you to function seamlessly and ensures your information is complete and accurate. In the tax world, keeping good records is the most important task of a successful business. Each taxpayer has a burden of proof as it relates to the information that they provide to the department on their tax returns. Taxpayers may be able to validate all sources of income, claimed expenses, and credits. If you maintain adequate records substantiating the information listed on your tax returns, you satisfy the burden of proof. Using the information provided to you in this module will help to ensure that you are prepared if there's ever an audit of your business. First, we will review general record-keeping requirements. Business owners in Pennsylvania are not required to use a specific type of record-keeping system. However, the law does require businesses to ensure that the records are complete and accurate. For this reason, it's important that you choose a system which clearly identifies your business income and expenses. In addition, it's important for a restaurant or eating establishment to maintain daily business records. Daily records can help you to monitor the progress of your business, which allows you to see whether your business is improving or if you need to make any changes. The department requires restaurants to recognize all sources of income and receipts. Therefore, you must maintain your records in a fashion that identifies your various sources of income. You also need to distinguish taxable receipts from non-taxable receipts. Next, you want to record expenses when they incur. You may forget deductible business expenses when you prepare your tax return. Recording them when they occur helps you to track your deductible expenses and ensures you are receiving the proper deduction. You also want to keep complete records on all assets. Good records enables you to prepare accurate financial statements, including income, profit and loss statements, and balance sheets. Such statements help you in dealing with your bank or creditors. An income statement shows the income and expenses of the business for a given period of time. A balance sheet shows the assets, liabilities, and your equity in the business on a given date. You will need to retain supporting documents. Your business records must be available for examination by the Department of Revenue or the Internal Revenue Service. If the Internal Revenue Service or the department examines any of your tax returns, you may be asked to explain the reported income and expenses. Complete and accurate records will facilitate the examination. Reconciling your accounts regularly can help to avoid headaches in the future. Simple steps like requesting an electronic statement of account can help business owners compare their monthly records to the department's records. This ensures that everything is posted correctly and we're all on the same page. You should organize records using an accounting method that clearly shows your income by tax year. If you own more than one business, you should keep complete and separate records for each business. If you decide to use an accounting software system, make sure it's a reputable one and one that you are comfortable working with. Your tax return is a product of your record-keeping accounting system. You want an accounting software that can deliver the best results. And then lastly, you should establish a separate business bank account for trust fund taxes. Sales tax and employer withholding tax are considered trust fund taxes. Trust fund taxes are taxes collected by a business as required by the department and held in the business's accounting system until they are paid to the department. You will find it helpful to open a bank account to separate the sales tax collected from customers or withholding taxes deducted from employees' compensation. This will prevent you from accidentally commingling funds, which could result in criminal penalties, as well as ensure sufficient funds are available to pay your taxes when they are due. You should retain copies of all returns, ledgers, journals, and supporting documentation, including source documents such as sales receipts and payable invoices for the periods under statute. We will discuss records specific to the restaurant industry in a few minutes. Your records may be maintained in an electronic or hard copy format. We understand that not everyone has a desire or the means to do everything electronically. Whereas organizing your information into file folders on your computer may be the cleanest way to keep records, binders and folders work just as well, as long as everything is complete and accurate. Another requirement you have is to retain your records for a certain period of time. The same laws that impose taxes also impose record-keeping requirements. Records must be maintained for specific periods of time so that the Department of Revenue may effectively administer the tax laws. This means you must maintain records substantiating the information on a tax return until the statute of limitation for that return expires. The statute of limitation is the amount of time the department has to assess additional tax and the amount of time you have to amend a return to correct an omission, claim a credit, or a refund. The statute of limitation varies by tax, but at the minimum, you should retain records for the current year plus the 3 preceding calendar years. As noted in the previous slide, sales tax and employer withholding taxes are trust fund taxes. The department may assess any time for the failure to report trust fund taxes. Also, the department may assess any time for non-filed returns. Now, let's talk about specific record-keeping requirements as they relate to eating establishments. This includes records for sales, expenses, employees, and income tax returns. Before discussing the record-keeping requirements for sales, let's have a brief discussion on what sources of sales are subject to sales tax for eating establishments. In general, the sale of food and non-alcoholic beverages by places such as a restaurant, bar, fast food operation, pizzeria, cafeteria, food truck, caterer, etc., is subject to the state sales tax regardless of whether the customer is dining in or taking out. Additionally, these same sales from an eating establishment located in Allegheny County or Philadelphia County are subject to an additional local sales tax of 1% or 2%, respectively. There are a few specific items that are not subject to state and local sales tax. These include alcoholic beverages, unless you are a PLCB licensee with a wine expanded permit. Then you must charge sales tax on the sale of wine for off-premises consumption or to go. Bottled water, as long as the bottled water is unflavored. Candy and gum, gift cards and certificates, separately stated gratuity charges or tips, and wearing apparel such as t-shirts, hats, and jackets. Please note that individuals purchasing a gift card or a gift certificate for your eating establishment will owe sales tax when the gift card or certificate is used to purchase ready-to-eat food or beverages. Keep in mind that any sales of items not subject to sales tax must be clearly identified on the sales receipt. Records that should be kept to support your sales include transactional receipts, daily sales reports, monthly sales reports, monthly merchant statements, and 1099-K forms. A transactional sales receipt must be maintained for each sales transaction. This transactional sales receipt simply records the details of the transaction. This transactional sales receipt may be in a form of a point of sale receipt, a cash register receipt, a guest check, an invoice, or any other original source document. But at the minimum, the sales receipt should include the following information. The date of the transaction is required to be printed on the receipt. Receipts should be sequentially numbered to avoid gaps in transactions. Receipts should include a description of the food, beverage, and miscellaneous items that were sold. The receipt should detail the price of each item sold. Any on-spot discount, such as store discount, employee discount, or coupon establishing a new purchase price, must be described on the receipt. The receipt is required to list the total sales amount of the transaction. The total state and local sales tax, if applicable, is required to be separately stated on each receipt. And then lastly, the receipt should list the method of payment, either cash, credit card, gift card, etc. Daily sales reports should summarize the total taxable sales, the total non-taxable sales, the total gross sales, and the total sales tax charged and collected for the day. Daily sales reports should separately state cash and credit sales. And lastly, the daily sales reports must reconcile to the transactional sales receipts. In addition, monthly sales reports should be maintained to reconcile against the daily sales information for the month. An eating establishment must also maintain the following sales records: monthly merchant credit card statements from the credit card processing companies, as well as the annual 1099-K form, monthly statements from any online food ordering companies such as Grubhub, DoorDash, Uber Eats, monthly bank statements, credit card slips, the transactional receipts themselves, as well as any documentation to support any void and/or canceled sales, and lastly, the federal and state income tax returns. In the event of an audit, the department will require that businesses using a point of sale system, otherwise known as a POS system, to provide the department access to the system's actual data set. This information or other electronic records must permit the direct reconciliation of all receipts, invoices, and other source documents with the entries in your books, records, and returns. If you use a POS system, you must maintain an audible internal controls to ensure the accuracy and completeness of the transactions recorded in the POS system. This includes internal sequential transaction numbers, records of all terminal activity, and procedures to account for voids, cancellations, or any other discrepancies in the sequential numbering. The POS audit trail must record any and all activity related to other operating modes available. The logging functionality must be activated and operational at all times in the system. This includes things like training mode or any changes in the setup of the system. Failure to have the audit trail or logging functionality activated and performing these functions is evidence of a lack of internal controls. One last thing on point of sale systems. As a word of caution, it's important to note point-of-sale systems and electronic cash registers are used by some individuals to engage in electronic sales suppression. Electronic sales suppression is the altering or deleting of sales records through computer software, which reduces the sales and sales tax reported in the point-of-sale system or the electronic cash register. Some computer software vendors will offer sales suppression as a service to its customers. It's important for you to be aware that possession or use of such software is illegal in Pennsylvania. On July 13, 2016, Governor Tom Wolf signed into law Act 84, which made the possession, sale, or distribution of zappers or sales suppression software with the intent to evade taxes as a criminal offense with fines up to $10,000 and 1 year of imprisonment. Sales tax is charged on each taxable item. However, any discounts or coupons will establish a new purchase price as long as both the item being sold and the coupon or discount are described on the sales receipt. Let's look at the example on the screen. A customer purchases 2 pizzas for delivery with a buy one, get one free coupon and a bottle of unflavored water. Each pizza is $12, the bottle unflavored water is $2, and the delivery fee is $4 for a gross sales total of $30. As the unflavored bottled water is not subject to sales tax, the total taxable purchase price prior to any discounts or coupons is $28. It should be noted delivery fees are subject to sales tax. The acceptance of the buy one, get one free pizza coupon establishes a new taxable purchase price of $16, provided a description of the coupon and the item being sold is listed on the sales receipt. In this example, the new taxable purchase price is $12 for the one pizza and $4 for the delivery fee. The restaurant should charge and collect sales tax on $16 or 96 cents. If the sales receipt does not reflect a description of the coupon or the item being sold, but simply reduces the amount due, then the sales tax is due on the total purchase price of the taxable items before any discounts or coupons. In this example, the coupon is non-descriptive. Therefore, the coupon does not establish a new purchase price, and the restaurant should collect and charge sales tax on $28 or $1.68 of sales tax. Sales tax charged and collected must be separately stated on the sales receipt. The restaurant or eating establishment is prohibited from including the sales tax in the amount due or advertise sales tax included on the menu items. Although the restaurant or eating establishment is prohibited from including the sales tax in the amount due, the restaurant may absorb the sales tax rather than charge and collect it from the customer. Using the absorption method, you must indicate the amount of taxable sale, the sales tax due, and that you will pay the sales tax on the receipt. In this example, you can see that the sales tax is calculated on the total purchase price of $28. You may not divide the total taxable receipts by the sales tax rate to arrive at the sales tax due. Additionally, the sales tax of $1.68 must be separately recorded in your accounting records. Any eating establishment generating taxable sales is required to file a sales tax return or the PA3 through the department's online system. When preparing this return, you will want to refer to your monthly sales reports as they summarize all of your daily sales reports and the transactional sales receipts. We recommend that you avoid using bank statements and 1099-K forms to prepare the return, as these sales records do not capture all sales activities such as non-deposited cash sales. On line 1, you will enter the total gross sales, both taxable and non-taxable, for the period being reported. The gross sales should reflect all sales prior to any discounts or coupons, as well as any gross sales from any online ordering companies such as Grubhub, Uber, or DoorDash. Do not include the sales tax charged and collected on taxable sales or any gratuity or tips on line 1. On line 2, enter the taxable sales subject to sales tax as per your sales summary reports. Do not enter any non-taxable sales. Do not enter any taxable sales associated with sales tax reported by online ordering companies such as Grubhub and DoorDash, unless the company forwarded the sales tax to your business for reporting purposes. For the most part, these online ordering companies will report the sales tax on their returns for the taxable sales facilitated through their online platform. On line 3, enter the amount of sales tax collected as per the summary sales reports. Again, do not enter the sales tax collected and reported by online ordering companies unless the sales tax was forwarded to your business for reporting purposes. Now, let's talk about some common business expenses incurred by eating establishments and the taxability of these purchases. We will start with taxable items. Most eating establishments need utensils, including plates and cups, forks, spoons, knives, napkins, straws, etc. All of these items are subject to sales tax. Other items such as administrative or office supplies are subject to tax. This includes your menus, guest checks, point of sale or register receipt paper, canned software, and computers. The equipment that you need to run your business, such as ovens, ice machines, refrigerators, tables, chairs, or signs, are also subject to tax. Any cleaning supplies, pest control services, or building cleaning services, such as the cleaning of a grease trap, again, are all taxable. And most of your utilities, with the exception of water and sewage, are also subject to tax. And then lastly, establishments licensed to sell alcohol must pay tax on the purchase of the alcohol. For a more complete list of taxable items, you can refer to Rev 717, the Retailer's Information Handbook, available on the department's website. Some of your expenses are not subject to sales tax, and this includes food and non-alcoholic beverages resold in the ordinary course of business, professional services such as accounting and legal fees, work uniforms such as a chef hat, t-shirts, aprons, waste hauling fees, insurance, licenses and permits, wrapping supplies used in the delivery or takeout of prepared foods such as styrofoam and plastic plates, styrofoam and plastic cups, lids, paper bags, wrapping foil, pizza boxes, and other similar packaging items used in the delivery or takeout of prepared food. Now, it should be noted this exemption for wrapping supplies does not extend to plastic or disposable knives, spoons, forks, straws, and napkins. The eating establishment must pay tax on these items. When purchasing taxable items for use in Pennsylvania, you must pay sales tax. When the vendor fails to charge sales tax on taxable items, you are responsible for reporting and remitting the tax on those purchases. Use tax is the counterpart of sales tax. It most often occurs when you buy items from an out-of-state vendor. The use tax rate is the same as the sales tax rate, which is 6%, plus an additional 1% local tax for items purchased in or used in Allegheny County and 2% local tax for Philadelphia County. An example of use tax would be a Philadelphia County restaurant that purchases menus from an out-of-state printer for $1,000. The out-of-state vendor ships the menus to the restaurant and does not charge any sales tax. The restaurant is responsible for self-assessing and reporting the use tax on $1,000, which would be $60 of state use tax and $20 of Philadelphia County local use tax. Use tax is reported on line 6 of the sales tax return, which again is the PA3. It is highly recommended that businesses with any kind of use tax liability do the following: establish a record-keeping system to record use tax due, set up a process where these types of purchases are routinely reviewed for unpaid sales tax, note instances resulting in a use tax liability on the invoice and record in your record-keeping system, and be sure to timely report and remit any use tax to the Commonwealth. Here are examples of records that should be kept to validate your purchases. Payable invoices for all goods or services, including any purchases paid with a credit card. Any invoices paid with cash should include a specific notation that cash was used. Check registers or copies of remittance checks or canceled checks. Credit card receipts or statements for any purchases made with a credit card. And payable journals summarizing all monthly purchases. Lastly, you should keep any other records detailing self-assessed use tax, as well as any depreciation or fixed asset schedule for capitalized purchases. If you have employees, you will need to register for an employee withholding tax account and maintain records for each and every one of your employees. To start, you will need names and addresses, social security numbers, occupation, and dates of employment. Remember that we follow many of the same reporting and documentation requirements as the Internal Revenue Service, so make sure you consult the Internal Revenue Service requirements as well. The next area we are going to talk about is employee payroll. Your payroll records must show that you withheld Pennsylvania personal income tax on all taxable compensation at the proper rate, and that you remitted the withholdings to Pennsylvania. The following documentation must be maintained: amounts and dates of all compensation paid to employees, amounts of tips reported by the employees, records of allocated tips, records of fringe benefits and expense reimbursements provided to your employees, dates and the amount of tax you withheld from their pay, dates and the amounts of your withholding tax deposits. As with sales tax, we recommend separate bank accounts for the withholding tax so sufficient funds are available when the tax is due. Also, you should keep copies of the withholding tax deposit returns and confirmation numbers. A standard payroll journal and an accrual account can be used to record this information. This will help serve as a basis for completing the W-2 wage record report. Employees who are residents of reciprocal states do not owe personal income tax to Pennsylvania on their wages, as their W-2 income is taxable only to their resident state. So if your employee lives in Indiana, Maryland, New Jersey, Ohio, Virginia, or West Virginia, please have them complete a Rev 419 and retain for your records. If you have employees, your payroll expense records will become the basis of your employer withholding return, or your W-3, that you must file quarterly. The W-3 is a reconciliation of your withholding deposits. Your records should demonstrate all taxes were withheld at the proper rate and that they were remitted on time. Remember to keep copies of your W-3 returns, as they will help you in filing your Rev 1667, the annual reconciliation. Let's recap some key points on record keeping. Ensure that your records are complete and accurate, and provide as much detail as possible. The burden of proof is with the taxpayer. Make sure that your records are organized and easily accessible in the event documentation is requested by the department. This will make the process of review by the department smoother for both parties. Keep records on file for a minimum of 4 years. Keeping good, detailed, and accurate records helps to ensure compliance. Before we wrap up this module, let's take a minute to talk about audit reviews. Title 72, Pennsylvania Statute 7272, states that the department or any of its authorized agents is authorized to examine the books, papers, and records of any taxpayer in order to verify the accuracy and the completeness of any returns made, or if not made, to ascertain and assess the tax imposed by Pennsylvania statute. In support of the tax code, the Department of Revenue examines the records of thousands of businesses for tax compliance every year. This is to ensure businesses have a correct understanding of their Pennsylvania tax exposure and that the tax laws are administered in a fair and equitable manner. With that being said, record keeping is one of the biggest concerns that arise during an audit. These reviews can be quick and painless, or frustrating and arduous, depending on how well a business maintains their records. Let's look more closely at the procedures of an audit to illustrate the importance of good record keeping. The department is required to use procedures that are in conformity with state law, department regulations, and policies. These procedures involve examination of source documents, journals, ledger, schedules, tax returns, and other records that you use to record sales and purchase transactions, as well as the withholding of Pennsylvania personal income tax. The auditor may conduct a complete examination or utilize testing methods that allow for the examination of a representative portion or a sampling of your business activities. However, when records are incomplete or inaccurate, or you do not provide the requested records, the department will develop tax estimates based on other information resources. The other information includes other tax returns, industry data applicable to the restaurant industry. The courts have upheld the department's right to use estimates in developing tax liabilities when reliable records are not provided as required. So, what we are trying to say here is, if you follow the best practices for record keeping, which we have shared with you today, you will minimize the time and cost of an audit. Thank you for joining us today. If you need additional information, please visit our website.
Okay, so sorry that video is long, but again, it's a lot of really good information. And as said in the video, one of the biggest things that auditors see when they go out is people not keeping correct records. So with that being said, we do have a decent amount of time left. If there are any questions, as I mentioned, Ben is on the call, so he's here and he's willing to answer your questions, whether that be related to the type of records you need to keep or the initiative itself. Any questions that you may have, feel free to unmute yourself and or use the, I don't know if Cindy set it up to where you guys can unmute yourself, but
I think they have to raise their hand and then I'll go ahead and unmute them, Alicia.
okay. Thank you, Cindy.
You can also enter your questions in chat as or in the Q&A as well. So either one works. We have a quiet crew today.
Yeah, it makes my job easy.
Alicia, you had stated that the field visits will be starting. Have they already started? You said in April, but have they already started or will they start maybe next week or the week after?
You want to take that, Ben?
Yeah, we're hoping that they begin next week. They haven't started yet. We're thinking they should begin beginning of next week.
And so if a restaurant is getting a field visit, is it a surprise visit or do they announce that they're coming before they arrive?
The way that it'll be working is that our Bureau of Enforcement and Taxpayer Assistance agents will be visiting the restaurants that are in their coverage area. They just pop in and see if anybody's available.
Okay, good to know.
And it does look like a question came in. Somebody said, has the phone line been experiencing traffic? And I'll take that one. That phone line was set up specifically if you're using the 425-2495 with the extension of 72251. That one is coming into the Customer Experience Center specifically to handle these calls. And we haven't received a ton of calls, so I don't think that there is a lot of traffic per se. I don't think that people are waiting very long to get somebody on hold or on the phone. Somebody else said, do you know how many times the video has been viewed?
YouTube did have a track on it. It was, I think 100 whenever Alicia clicked on it there this morning.
Way to go, Ben. I'm glad you were paying attention.
thought the video was great. Definitely a great resource for everyone. And, it makes it even better to have the tags in it so you can go directly to the specific area of the video that's going to answer your specific question. So that'll be very helpful.
There is a question, Ben. It says, what exactly did the Zapper legislation say?
I don't have it verbatim. If you wanted me to, I could look it up real fast, but essentially it made the act of selling, possessing, or using any kind of electronic sales suppression illegal.
This is just a small piece, but this is something that the Small Business Development Center, we include in our training. As a banker in my previous life, one thing that very simple and easy to do is to open up that separate account. And I was glad that that was noted, so that the sales tax and the employee withholding tax, that it doesn't go into the business's cash flow, that it gets separated and put aside. That's critically important, so that businesses don't get comfortable with money that's not theirs.
Yeah, I can say from the audit standpoint, we definitely view sales tax collected from the customers and personal income tax withheld from employees to be one of our top priorities when we're looking at it. Those are trust funds. They're not the income of the business. They are due to the state. They're taken from other people who actually owe the tax. And like you said, we've seen a number of problems where people commingle those funds and they end up spending it inadvertently, and then it leads to problems for them down the road.
Okay, we have a question in chat. Are hard copies of sales receipts required, or are electronic POS system receipts, transactions, etc. sufficient? Specifically, they are using Square POS.
Yeah, so it doesn't matter if the records are kept in a paper or hard copy format or electronic. If you have electronic receipts, transactions, daily reports, monthly summaries, those are sufficient for us. I think the problem that we see a lot of times is when people, again, are mixing those two types, where some are maintained in hard copy and some aren't. It usually leads to problems with the records not being able to be maintained in a complete manner. Either one is fine. Just want to make sure that the ones that you're keeping are complete. And I would say that, if not for us per se, but for the IRS, mixing the types of records that you're keeping can get you into trouble with them.
Alicia, the information sheets that were highlighted in your PowerPoint, are those downloadable forms off of your website?
Yep, they are. They can pull up the PDFs. If it's helpful, Cindy, I could always send them to you as attachments if you want to disseminate them to the attendees, but they can definitely download this PDFs directly from that revenue.pa.gov/restaurants.
Yeah, very helpful. That's awesome. I think all this information is valuable as people move forward, and that information will be shared within our network as well. And so that website is a great go-to website for this industry. So we get a lot of questions from this industry. So today's webinar has been extremely beneficial. Thank you. If we don't have any more questions of our attendees, we'll go ahead and wrap it up today. I just want to thank Alicia and Ben for being here and presenting to us and fielding a lot of our questions. This Pennsylvania Small Business Development Center continues to value this partnership with the Department of Revenue, and we appreciate the time that you're putting into providing this great education. To our attendees, I would just let you know that I will be sending out the PowerPoint, the 2 PowerPoints that you have viewed today, both mine and Alicia's. I would encourage you to look for our survey that will be sent out. Your information, your feedback is extremely beneficial for us moving forward as we continue to plan more events with the Department of Revenue, as well as plan additional training on topics that you need. In addition, I would just encourage you, if you're not a client of the Small Business Development Center, I'll be sending a link that you could become a client of the Small Business Development Center. Feel free to reach out to me. Even though I may not be the SBDC in your area, that's fine. There's no wrong door in our network. Connect with me and I will connect you with the SBDC in your neighborhood. And with that, Alicia, thank you. Ben, thank you. And to our panel from the Department of Revenue, appreciate it. We look forward to next week's webinar on exemption certificates next Wednesday, April 13th at noon. Thanks, everyone. Have a great day.
Thank you.
Thank you all.